Hey, everybody, NFT fans. Welcome back to the NIFTSY Podcast. I'm your host, Eugene, aka Crypto MC, and I am so happy because I'm here today with renowned Ralph Liu. He's the CEO of WeCoOwn, We Property Owners, MuleChain, and Turbochains. Yes, the unique talent to explain crypto in the very simple way that even children have absolutely no chances not to understand. I really love how Ralph does that. So Ralph, I'm so excited to have you again on my show. Thanks for joining me today.
Thank you, Eugene. Good to see you again.
I would love to ask you to tell your personal story to our listeners in crypto. How did you get into the blockchain space?
Okay, that's a very interesting question, because if you look at the blockchain, what it facilitated is basically the idea of tokenization. I myself happened to spend almost 17 years on this very simple concept, But in the past, the only way for you to achieve fractional share ownership is via the traditional legal structure, If you have a company that's a corporation, then you have stocks, the share in that corporation. So that's a fractional ownership. I have tried, and for the last 17 years, trying to apply that concept into real estate property, into personal assets like yachts and jets, and into the artwork before tokenization made possible by blockchain. So to answer you that question, this is really closer to home. And I've spent a lot of my time and my money into making these concepts practical, and as a technology ventures. But sometimes, it's just way ahead of its time. And for whatever reason, it didn't really happen. Lo and behold, in 2017, after the initial seminal article for Satoshi Nakamoto, he wanted to have a digital cash. Basically, that's a bearer form of cash, just like a real cash, right? Now, how do you make it possible? The key idea is basically just have a distributed ledger and to let people to trust whatever happened, that record kept in that ledger. That's where the origin of blockchain came from. So because of that simple concept, I would, say very loudly, Satoshi didn't come up originally with the idea to create a blockchain. He wanted to have a digital cash, a bearer form of cash, where anybody can transfer it using the advantage of technology, very fast, very efficient, and also anonymously. So that was his goal. Then, as you know, the necessity is the mother of invention. So lo and behold, we have this blockchain, immutable, distributed ledger. That's what really brought me into this, arena. As I mentioned to you, I spent 17 on the fractional share concept. So by the time in 2017, I realized the power of blockchain. It's just a one-way ticket now. There's no turning back.
Yeah, cool, fascinating story. I suggest our listeners to pay attention on the Ralph articles. Link is written down below about fractionalizing NFT. He tells his personal story about tears, sweat, and so on and so forth about fractionalizing ownership. He started in 2006, 15 years ago. He's a very experienced guy in that. Of course, he could not miss the tokens, the blockchain, and fractionalizing. We will talk about that later. So, Ralph, you have created the huge range of the blockchain-related projects. WeCoOwn Rewards, We Property Owners, MuleChain, Turbochains. Tell us more, please. What values do this project bring to the people?
Okay. So to understand what happened, I just say, so happened had another talk, long talk, recently in Riyadh, and talking a little bit about the personal journey and how I went through, to arrive at today with these ventures. So I started out, out of business school on Wall Street as the derivative trader and derivative banker in Asia in the financial center. I was the head of Chase out of Hong Kong or UBS out of Singapore. All along, I was an interbank guy. But, in the field of structured derivative, basically we're the financial innovator within the bank. So since I left the bank, I continued that trend, trying to develop something into, other financial assets, such as real estate. So I spent all this time trying to develop initially on the derivative, for innovation on the real estate, but that's just way above people's head. It's very difficult to achieve a success in the consumer market. So I put aside the derivative. Then for the last 17 years, as I said, I found the fractional share ownership has a lot of new economic value. So when I went through several generations, initially is derivative related, the future and option exchange, the contract traded on the future exchange, then OTC derivative. Then, I came up with the idea called fragile, my fractional ownership on real estate, on artwork, and eventually created a platform called We Homeowners Platform. So these are all the background. We learned and paid a lot of tuition through the successes and failure. And then we really learned how to go about doing that. But very, very simple concept is, if you use a conventional legal structure, such as an LLC, trying to accomplish the fractional share ownership, it's impossible because there's no trading liquidity of member interest within an LLC. And on top of it, you didn't have a lot of people with the liquidity of money to invest into the fractional share units. So then again, as I said, when 2017, people realized all of a sudden, the distributed ledger technology can help us achieve that. That's the tokenization. So again, I want to mention tokenization by nature is fractionalization. So all of a sudden, I spent 17 years, without the technology, you couldn't get anywhere. But lo and behold, in parallel, the technology world just created the product, which really, sort of no need to explain to people the economic benefits of fractional share anymore, because people already ended up with the product. They're enjoying the economic benefits. So up until that time, as you can see, the most natural venture is a WeCoOwn. So we picked up where we left off on the previous attempt, trying to bring that to life. And all of a sudden, I got sucked into the whole blockchain idea. And lo and behold, another idea crossed my mind. That's a MuleChain project. That's, I believe, is how we got to know each other, during the last 2 or 3 years in the speakers circuit. So I try to promote that idea. It's a brilliant idea. And also because that's the best way to use the blockchain technology advantage. So to bring the audience a little bit background information on the MuleChain, it's basically, let's say Eugene, you are based in Kyiv, Ukraine. So if you're flying to LA next week and somebody find out your itinerary, they say, hey, Eugene, can you bring a jacket to my daughter? She's studying UCLA. If you do, I'll pay you $100. Why not? You don't spend any additional effort. You can make the money to subsidize your travel costs, So that's a brilliant idea, as you could see, by using the blockchain. Let me just tell you, that can move us from the Web 1.0 to Web 2.0. Why? So when internet first started, that's only the value, just the information dissemination. So let's say in Ukraine or in Russia, you can see an iPhone that costs you, $2,000. But if you are based in the US, you may be able to get it for $1,000. Then previously, without the Web 2.0, or the blockchain capability, and then all you can do is just knowing that information, nothing else you can do to arbitrage. Now, with the MuleChain, you can easily hire a MulePal to travel to the US and then put it in the pack station. And then for the traveler, which is MulePal, to bring back to Ukraine. Then you achieve, saving $1,000. This is a very simplistic example of the economic value that blockchain provided, So regarding that venture, and put a long story short, and we were just about, after 2 years and developed the product and the platform, just about to launch it. Then came the pandemic. So all of a sudden, that travel-related idea, came to a sudden halt. Because with all the travel restriction, who's going to bring any item for somebody else, So we put that on the back burner and, just wait for the global pandemic to subside. Then we will bring it to life again. Now, during the meantime, that's where it started from the last year, the beginning of the pandemic. We switched gear. That's where we put in all the money. And because there's no ICO market anymore, we don't want to just talk about an idea without a product. to the investors. We self-financed everything, redeveloped the old technology, and then that's what you see on WeCoOwn platform today. We are just about 1 month short to launch the platform services. And at the moment, we're doing the intensive QA work. And but to tell you the difference, to explain to you the difference between WeCoOwn, We Property Owner, and WeCoOwn Rewards very briefly. WeCoOwn is basically for buyers. What we want, WeCoOwn, is basically become one of the 3 largest social networking platforms. So it's just a social networking platform, but for people owning assets and real estate property. So let's do a comparison with LinkedIn or Facebook. Why do people want to spend the time sitting in front of the computer to register themselves as a member for LinkedIn? They then upload all their work experiences and degrees because they want to impress other people to get a job. Why do people sit in front of the computer and to register at Facebook upload all their personal travel pictures? Because they probably want to make their friends jealous, what a good life they have. Or young kids chasing boys and girls, that's for social reasons. Now, what is the WeCoOwn, the value proposition? Basically, we wanted to be the world's largest social network platform for anybody to upload the assets, personal assets, like a jet, like a vacation home, and real estate property. So if you don't have a vacation home, you can always just upload your home. If you don't have a home, upload your car. If you don't have a car, upload your bicycle or a piece of painting on your wall. So that's where the WeCoOwn rewards come in. We created a token traded on the exchange. So we will give you the rewards. Once you register, you get 10,000 tokens. If you upload any assets, you get another 2,000. So the remaining side, that's a We Properties owner, that's geared toward a seller. So that side originally is just like a Zillow, like a Redfin, like a LoopNet. But we want to gear toward the cryptocurrency owner. So now we consolidated everything onto the same platform to introduce this, personal assets and property social networking platform. Eventually, our goal is to become the largest collection of personal assets and personal real estate properties in the world. Think about the artificial AI and the big data, what you can do with all those data.
Gotcha. It sounds like a fascinating idea. I wish you good luck on this great way. But regarding your personal experience with NFTs, which is the main topic, general topic about today's talk, how did you get your first exposure ever with NFTs? How do you explain what the hell is NFT? Sorry for my slang. And how NFTs are being utilized or planned to be utilized in your current project?
Right. That's a very, very interesting question. I personally, got first involved in that in 2017 when I went into the speaker circuit on the blockchain topics. Then we know about NFT and all that stuff. Everybody sort of in the back of their mind that knew some value of it. But collectively, that's interesting enough. Nobody really woke up at that stage to what this could be. Now, in reality, if you look at what an NFT is, it's nothing different from the Bitcoin, But technology, I have to really bring up the technology aspect of it. Now, previously, the majority of the token, or in the ICO or whatever, is based on the ERC20 standard on the Ethereum network, right? Then people come up with a standard with a ERC 721, and then they make it non-fungible, okay? The term could be a little misnomer. Right now, to jump the gun, we are actually trying to introduce a second generation, that's a WCY token, other than a reward token, WCX. So we haven't done that yet, but we plan to launch it at the end of the year, the WCY. That will be based on the new multi-token standard and introduced by Vitek Radomski, of Engine. And they were successful because they are, deeply rooted in that e-gaming arena. So they use that standard very successfully. What we're doing, with all the NFT, so that your audience know, is focus on to become the world's first platform in the massive scale to bring NFT into the real physical assets and real estate property in the real world. That has a lot of challenge to it. So back to the concept of NFT versus Bitcoin, for example. Technology-wise, it could be actually more simpler. It just all of a sudden, last year, this year, everybody found out the new fund, arena to link it to a digital asset, link to an artwork, so easy. That's a low-hanging fruit. If you set up a venture, you can make a lot of money. That's where the current craze is about. But if you look at the technology-wise, you don't have to really produce, continuously to produce more blocks on the blockchain. Once your, whatever digital asset you created, the blocks or a few blocks has been created, it's there already. They help you with the authentication. But then again, the control of that is basically in the form, and that's what I would call the bearer form of digital assets. We can talk more about this later.
Okay. How do you explain why did we face all the world NFT hype in a digital art space? And was it similar or differ compared with ICO hype in 2017?
Okay. Very interesting question. Okay. So the current hype, as you can see, the ICO, just like when the whole crowdfunding concept started, all of a sudden the technology went ahead and ahead of the curve. Obviously, you have a lot of tech-savvy young people who are familiar with the technology, but they may not have any banking background or legal knowledge. So they rush to say, oh, all of a sudden I could do it just because I can. So during that time, I analogize the situation is, you will have a smart kid attended some class, sitting some classes in the medical school. He learned how to do an open heart surgery. All of a sudden he say, oh, I'm very competent technically or operationally to perform an open heart surgery. So he went ahead and do it without any medical certificate or any regulatory approval. That's very similar to what happened to crowdfunding. So the 2017 ICO phenomena is really just crowdfunding concept, on fire and fueled by all this new technology of tokenization. All of a sudden, you don't need the security for crowdfunding anymore. You don't need to hold a stock. You can just hold a token. So that's what happened to the ICO. Eventually, all this has to bring under the traditional regulatory environment. So for the long term, for those people who want to be successful, you have to play, with the same cards that people have been playing for, centuries. When the stock market first started, then people evolved into rules and regulation to protect the investors. Now, back to your question about the NFT. The NFT could be a result of the way to really bypass some of the regulatory requirements. For example, in one of my blog posts, on the Medium blog post that I wrote extensively on this issue. So let's say to begin with, without the technology, even just based on the Howey test, right, from the Supreme Court published in 1933 on the investment contract. So let's review that. The investment has to be a currency. It has to be in the common enterprise with the expectation of making profits. Then fourthly, most important, you have to rely on a third party's efforts for you to derive that profits. Then you satisfy this as investment contract. It's a security if you sell that to any investors. Now, take a look at it. Without the technology tokenization, even in the real world now, many states, they basically exempt the real estate and artwork. Why? Because there's no common enterprise. Secondly, there's no third-party effort for you to make that profits. So even by traditional concept, the artwork and real estate are easy grabbing for people trying to sell to investors. Okay, so now apply that to technology, to tokenization, to NFT. The reason why, they're just having such a craze because that's an easy area. And they don't have to really touch upon the securitization regulation. But having said that, right now, the new development, as we ourselves, we're very careful to step on the water in this field. We're doing the frac NFT, the fractional NFT. So if you have a fractional NFT, then the security law, cover, I see, as the buyer said, it's very broad. And also determine how you sell it. So more on this issue, if you're interested, it's in the blog post. or how we are doing different from the conventional crowdfunding way.
Cool explanation. I love it. I love it. You are talking about the fractionalizing of NFTs, the core point of your business, of your explanation right now. What is fractionalizing of NFTs? Why do we need to do it?
And one more time, why do we need to?
Why do we need to have fractionalizing? Why don't we have the simple NFT? Why need to divide it into fractions?
Wow. Okay. So this is where I spent 17 years on before the tokenization, Eugene, because in the beginning, there wasn't a tokenization token. So we had to really develop a lot of educational effort to teach people about the economic value of fractional ownership. For example, you have a painting, old master hanging on the wall in the museum. Nothing they can do with it. It's very expensive. People need to bring from the wall of one museum to the other. They need to spend $50 million, $60 million, So now what you can do is the separation. I again, published within the last 17 years, many times on this subject, as far as the concept of usufruct versus, the naked owner, the remainder man, right? The usufructuary. So people who can use the property, either real estate or any other property or assets, versus the true owner or the remainder owner of this property. So let's say the same, Van Gogh painting hung on the wall, you can actually continue to use hang on the wall to benefit the people, right? Of course, they're going to sell tickets to generate revenue, to do the safekeeping and managing it. But the owners could be, digitized. Before digitized, you can use LLC to sell in the fractional share ownership. So anybody can actually democratize the investment value of that artwork. So this is just one of the examples as far as the fractional share ownership. Of course, once you digitize it, let it become a token, then the price discovery, the efficiency, effectiveness of doing the transfer of the ownership become much easier. So there are many, many, economic benefits for fractional shares.
Cool. As for me, you are trying to solve the very sophisticated task to connect the NFT as a digital asset, as a tool with the real world, and connecting NFTs as a tool with the real world and physical assets, such as real estate, cars, and so on and so forth. It seems to be much more sophisticated and almost impossible due to many legal issues. Do you see any chances for us in the future to sell, let's say, a house or a car in the form of NFT, or even have a real good turnaround of all the physical assets in the world in the form of NFTs?
Again, another excellent question. So I just recently completed a blog post on this issue, or the one prior to that. Let me answer your question in two parts. So if you look at the difficulty, the challenges of the attaching a token to the physical goods in the real world. So what are the issues? First of all, you can attach this token you have just minted it to either digital assets or a digital art. That's very simple, very easy to do. That's why you see, just going crazy on OpenSea, on Rarible and all that stuff, because it's so easy. You can actually secure the ownership. They attach, doing that attachment at the time they minted the token already. Secondly, if you want to attach the token to a physical world and any goods in the physical world, like a yacht, like a jet, like your vacation home, or like a real painting, an old master or contemporary art piece, that's difficult. So people tried, since the beginning of this concept, right, trying to attach that. There's no way to do it without involving the current legal infrastructure, the authority, who actually have in their registry the real owner's name. But if you succumb to that, then what is the point to attach the NFT on physical goods then? We already have a centralized registration, which is made by technology already. For that matter, and let's say your cars, and they're registered with the DMV. Your yachts are registered, some of them are registered with the DMV. Or with the LLC, you're registered with the state government, okay? So currently, they're already doing that. Then, even if you look at our money of the fiat currencies. Your money you have in the bank, they are registered with the Federal Reserve. They're just moving money based on a central registrar, you know? So the second part of attaching the token to the real world, it's very difficult if you want to stick to that whole decentralization concept, you know, the distributed ledger, because you cannot do it in the current legal environment. Certain assets are easy to do, as I said, like a digital art, like digital art, you created it in the metaverse, right? But once you attach this to the physical world, the easy shortcut is basically trying to create a bearer form of that legal ownership. And you can digitize or create the image copy of that to link to your NFT token. That would be a shortcut. But this is only one half of the story. The thing getting more interesting is actually the other half. The other half is the same token. You see, on one hand, you're trying to link to a physical goods or digital art or whatever. On the other hand, you have to link to a person. That's how you complete an ownership, right? But if you attach to a person, think about it. Who's going to actually put his name onto this token? Now, how are you going to transfer this token with your name on it? So that's really just, self-defeating prophecy, right? What the NFT attached to a physical world is really focusing on the decentralized concept. It's very similar to a numbered account in the Swiss bank. So unless you can create a bearer form of legal ownership, then you can accomplish the NFT to transfer easily to somebody else anonymously. That was the original goal. But if you cannot do that, then what's the purpose? We can just continue to use the Federal Reserve, the centralized, ledger. We can continue to use any state government to register your automobile vehicles. So that's where the challenge for, attaching the NFT to the physical world.
Totally agree.
Second part of the question you asked, as far as the legal aspect of it, that's where the WeCoOwn platform will be different from all the other real estate crowdfunding projects you have seen in the marketplace. Because on the WeCoOwn platform, what is the purpose of WeCoOwn? Let's say you see a painting, you see a yacht, a boat, and or a vacation home you want to buy, but you don't have enough money. You don't want to, involve the debt with a mortgage, even if you don't have enough down payment money. And then all you need to do, just post a picture into the website forum. And we have all the equivalent stuff. Your friends, we call it my cohorts. So you post it into forum. Same way you post on LinkedIn or post on Facebook. You say, hey, who likes this boat? Who want to join me? That's how you meet new friends, new co-owner with you, right? So this is how they meet. So let me use the example of the yacht again. Yacht is probably the best way for co-ownership. Because if you own a yacht, ask yourself how many months you're going to use this yacht for. At most 3 months, 4 months in a year. The remainder of the year, people usually say the maintenance cost is about 10% of the purchase cost. So let's say a yacht of $5 million, you're spending $500,000 a year just to upkeep it, okay? Why don't you own it with 3 other persons? Each one of you enjoy 3 months of the time. So this is happening in the real world already. In the beginning, so you understand, we also developed real estate brokerage, mortgage brokerage, and yacht brokerage in North America, and trying to support all the technology platforms. So we've been doing, been there, done that, in the physical world to accomplish the fractional share. But if you look at when we apply to the NFT market, there's a big difference, because the 4 persons who have already met on our platform, they decided to buy this yacht from that particular seller. Now, as an alternative, we give them the option to mint their own branded NFT on demand to represent their 1/4 ownership in the yacht, versus the other conventional, tokenized crowdfunding platform, where they tokenize your NFT. Then they have to sell it to investors. So this is what I call in my blog. I call the first type, I call it pre-NFT buyers ready token minting. We call it type 1 NFT minting. The second type is you tokenize first, then you seek investors. So that's post NFT, investor seeking token minting. We call it type 2 NFT minting. Now, as you could understand, based on the Howey test, the type 2, definitely you will need to treat it as a security and get registered with the SEC. So first type, I can say, with good confidence, you may not need to. But the iffy part, the ambiguous part, is whenever you're trying to sell the secondary interest and how you sell it. So this is just a little bit personal view, and regarding this legal aspect of it. But these fields are so new and nobody has the authority to really give you a definitive answer at this moment.
Yeah, I totally agree with you. Maybe you may mention another legal issues, not regarding fractionalizing and general legal issues which have arisen with growing now of NFT segment recent years, which need to be solved. And do you think are the government standing to create maybe the specific regulatory frameworks for NFTs apart from the other classes of the virtual assets? Many governments have passed the general laws about virtual assets, digital assets, and stuff that. Will we see maybe NFT Act in the US or somewhere?
I would see this is going to be a long process of digitizing everything in the physical world, and because it's undebatable, there's a lot of technological advantage of digitize everything in our life, to a certain degree, right? But bear in mind, they will not replace our physical world, right? And that's why the whole issue, you look at the Mark Zuckerberg's new baby of the metaverse stuff, So people tend to forget what happened to Second Life, and started in 2003. And Sensar, there's a lot of all these venture stuff. So, if you look at the continuing effort for people trying to digitize everything, as I said, the main challenge is really how to bridge the gap between the current legal framework of ownership of the physical world into the digitized tokens. So as we speak, and nobody really have a final say on the thing unless the government or, any the entrepreneurial and knowledgeable and lawmakers, they want to take the initiative. But this is very difficult, right? As one of the senators was saying, out of I don't know how many, and 100 of the senators, only 5 of them understand what's going on in the crypto world. So you're electing 70, 80 years old people to make decision on the crypto laws. That's the initial hurdle we have to go through. I don't see any lawmaking is going to happen pretty soon. But to answer your question, this is a long-term trend. It has to be. And how long does it take? We don't know.
Totally agree. I'm curious, speaking about these potential co-owners, let's say American citizens who are super familiar with LLCs, shares, real estate, and so on and so forth, how hard is it to explain them? What do you offer them to buy? What a token, NFT, regarding technical infrastructure, about the technical literacy? Is it hard to explain what a blockchain, wallets, marketplaces, and so on and so forth? That's a question.
Okay. So as you can see, I spent 17 years on this particular issue. In the beginning, I spent a lot of time doing research, just like being a structured derivative bankers, doing innovation within the bank. By the time you left the bank, whatever you innovated, you left at the bank, you didn't take anything with you. But when we left the bank, we started doing the innovation on the real estate side in the fractional share or derivative or whatever. So all these efforts, as you can see, and basically, trying to provide the economic value and into this field. But throughout this period, yes, once you invented some new structure, like a FARGO, FARGHO, flexible and reversible joint home ownership, I spent a lot of time on this. I even trying to file patents. Then I created the WeHomeowners platform, trying to educate people. So eventually, we set up our own real estate brokerage, mortgage brokerage, trying to make this thing possible. And but there's a lot of educational work. Again, this is a pre-tokenization. People haven't seen it, haven't touched it. You don't have a product. You just telling story, trying to educate them, explain to them the economic benefits of something that didn't exist. But right now, the difference is the tokenization existed first. Then you can teach people about economic value. That's why now it's much easier now, right? That's a big, big difference. Now, after 17 years, with all the money spent, the failure and the success, we learned a lot of things. I realized the real power is really creating the platform for people to, accomplish whatever they want to do on the decentralized basis. We started out being, I created a structured module to teach people how to do it. But that's really a small piece of the business. And also, if you want to teach people to do things, letting people dance to your songs, that's much more difficult than giving them a platform. Let them to innovate. Let them to do something. So this is what WeCoOwn platform is about. We no longer position ourselves. We may still provide them with module, with all the different methodology, but we open the platform to everybody in the world to do the way they want to accomplish in their local geographical market. That's our goal. So that's why I would imagine if we don't really push for something, some particular method, that will become much easier and let the people learn by themselves. And we continue to evolve that way.
Totally agree. And the businesses, an explanation, education of the clients. How do you see the possible use cases of NFTs in the future going beyond digital art, collectibles, gaming, metaverses, even real estate, and fractionalizing? What purposes they will likely be used for in the terms of our life? We will see personally, you and me, we will see this.
Mm-hmm. Well, I can provide a little bit of philosophical thoughts on this, but I obviously don't have the answer on the timeline and all that. So why don't I share with you some, funny philosophical thoughts on this? So let's say the goal is for people to digitize as much as possible, right, into the metaverse. But, you got to ask yourself the question, what is the main difference between watching porn or, having sex with your own wife for the progeneration record, to build a family? There's a big difference between that, right? So there's only a limit what you can push the metaverse for the entertainment purpose. You can do the e-gaming, you can do the digital art, you can combine that with movie, with music and everything. But that whole arena will remain what is called the entertainment industry. It's very difficult for them to break out into the physical world. But because there's money to be made, there's a lot of technological advancements, developments that we could learn from the forever effort trying to apply the digitization of NFT into physical world. That's what's going to happen. But as we go about doing this, you will see everybody's trying to tout about the distributed ledger advantage, such as decentralization versus centralization. This is a forever battle, between ideologies. So right now, young kids coming to the arena, they say, oh, wow, I believe in the decentralization. Everything has to be decentralized. You got a lot of libertarian and all that stuff. But they forgot to look back into the world. You have a socialism versus capitalism. They're fighting each other. The whole world is like a sine wave. Whenever you have the socialism triumph, everybody become equal but poor. Then you have revolution. Then people become capitalism, open up the door. When the capitalism, becomes the peak market, you have a lot of the, polarization, the rich and poor differential become big. Then you have another revolution to bring people down. The same thing is going to happen to the battle between decentralization versus centralization. So I would say, because there's a technology advancement, there's high barrier to entry. You have different demographic of people. So you will have a lot of people, they can blog all day long about the beauty of decentralization. So that decentralization will be utilized by a lot of people to push forward for the tokenization, for the NFT. And basically, the way they use the decentralization as ideology is nothing different from people in any country. to use democracy as an ideology to overthrow an existing centralized power. By the time they utilize the democracy decentralization ideology to win, they themselves become the new decentralized power. So now you can observe the same phenomena with all the technology venture, you know? Everybody claimed themselves to become, even just for Bitcoin, for God's sake, you know, everybody touting the value of decentralization. Ask yourself whether that's true or not. You're basically just putting all the centralized power into the hands of a few selected people or .org. We call themselves, you know, decentralized power. So without, in the human world, there's no way for any human society to achieve prosperity, peacefulness, without a centralized power. So this is not, you know, coming to an answer or no to any situation. I was just saying this battle is going to continue for people to use ideology for their own good. Then you will, again, like a socialism, capitalism, see a sine wave ups and down.
Yeah, absolutely agree. Any professional talk about crypto, inevitable turns or should inevitable turn to the philosophy or ideology between conjunction word, how to say, the word, not the word, coexisting now, centralized or decentralized systems. And we have to choose where to be. And that's great. So we have these alternatives to be in centralized hierarchical systems like such a government or army, or for example, or to be in the flat distributed ledger system. And that's the 21st century reality, and that's good. How do you see the future of NFTs in 3 years, and what first baby steps for newcomers you would suggest to go towards NFTs?
Well, I would imagine, you know, because of the current, there's a lot of activity in the low-hanging fruits. That's the digital assets in the e-gaming industry. That's the digital art, because they could be created at the time of minting the token, right? So even those industries, there's enough money to be made by technology, entrepreneurial startup ventures. Because of there's money to be made, then there will be a lot of resources and invested, devoted into the infrastructure investment, and to make that thing, you know, the whole NFT for that part of the world and more into perfection. So, but the real big piece of the pie is really to what degree you can digitize the real world goods, right? Assets and property into NFT. So that's a long-term trend. We continue to grow in that trend. But again, to what degree we can use that technology advancements from that digital art, from that, you know, the e-gaming arena and into this direction, that remains to be seen. And of course, this part, we will need to bring a lot of the established legal framework into it. And that's not just to, you know, developing a new way to do coding you can solve that problem with. This needs a lot of the remaining, you know, human society, the laws, you know, the legal framework to really cooperate with the development.
Well, Ralph, it has been a very fascinating and super educational talk. Where to find you on the internet, where to read you for those who maybe want to follow you, and what upcoming event, if you plan, are you going to speak?
Well, you know, I'm on LinkedIn, and then on all of our ventures, WeCoOwn, you can always find me there. And as far as, you know, the speaking circuit, where we saw each other often in the past. So due to the pandemic, it just makes things a little bit more difficult, you know. And I participated in some of the online forum and online interview like this. And really a great pleasure to be able to speak to you again, Eugene.
Yeah, thank you very much. It was awesome, fascinating, amazing, super educational talk. Ladies and gentlemen, this is Ralph Liu, the CEO of many great blockchain projects mentioned in the interview. You may find his articles on the links below in the description of this video. You were watching to the NIFTSY Podcast. It's supported by the NIFTSY protocol. Please like, share, subscribe, comment, and don't forget to hit the bell bell button for not missing the future episodes. We're trying to publish daily. Ralph Liu from California, yes, and Eugene Crypto MC from Eastern Europe. Over to you. Thank you for
Can I add a point, Eugene?
Yes, of course.
And I would like to take this opportunity to invite people to join our effort. And we have developed the product, the mobile apps, the platform, but we need a lot of talented people to co-own the project with us. That's why we call it WeCoOwn.
Great. So let's go on. We are WeCoOwn. Thank you very much again. See you in the next episode of the NIFTSY Podcast. Bye-bye.
Thank you, Eugene.